Hello and welcome to our monthly video. This is Tom and Ryan talking about our video of the month topic. One of the topics that's come up a lot is inflation. When they are printing $1 trillion every 100 days.
What does that chart look like?
I don't know. You've seen the chart?
It actually goes like this. For years and years and years, it's going up. But then suddenly the last 3 years, it literally goes up like Mount Everest. That's how bad it is. So one of the things that we saw, we were looking at some conservative models when we were reviewing portfolios. Bond numbers are horrible.
What type of numbers have you seen over the past 3 years?
The conservative model in general is about flat in the last 3 years. You know, it's really no return because they lost money 2 years ago and then they got a little bit back last year.
And that's not even considering inflation. That's the actual just return numbers.
Returns.
Yep.
And the balanced model, which has some stock in it, is more like 6%. And then the next one up, moderate growth, where a lot of our clients are, is sitting there at 7.5%. But if you're just in bonds, it's not a good number.
Yeah, I think I saw something that the bond aggregate index is down about 3%. And again, these are all estimates, but for the most part, if you were in bonds for the past 3 years, you did not like the rate of return that you've received.
And the other thing I've seen is people suddenly think money markets at 5% are a real winner. If you do the 3 and 5 year averages of a money market, it's not any better than anything. It's recently it's better.
Yeah, I would say money market is not an investment strategy. It should be specific to shorter term goals, emergency savings, things of that nature. And yes, some clients or investors think that, yes, I made 5%, it was guaranteed, I feel safe. But inflation's coming along, it's not a great number. Tom, you mentioned some charts that you've seen. Tell us a little bit about those charts.
Well, you could believe the government, which I have a hard time these days, because it's always, when they get a funny number in a month, it's a surprise. They didn't know it was coming. And then the next month, they have they recalculate it. So, and nobody remembers all this stuff. So you have to go back longer. And they used to go back to 1980 and calculate a basket of goods, and what are they spending now? But suddenly they're sitting there in 1990, and it's a much different number. 1990 to now number is like 4% inflation on average. And if you just go back to 1980, it's 8%.
And I mean, food alone, and that's not included in that number, correct?
No.
So food alone, back in 2020, an average family spent about $9,000. Now, fast forward to 2024, it's $16,000. So it's gone up $7,000 over that short time.
And they don't include fuel either, which is the gas in your car, which is going up in 3 years by 79%. So, I don't know how you leave those two out. That's been out for years, like since the 80s or maybe even the 70s. But
yeah, and we can go back to 1970. There was a study done that $100 in 1970 is now worth $11. And that's your purchasing power right there, and why you can't just keep all your money in a savings or CD type of account. And what do you think the number is that clients need now? Do you think it's still that $1 million, or do you think that's changed?
It's in your lifestyle. I mean, I had a guy who said, "Hey, I earn 200, and my wife earns 100 something. And we'll be good with 4,000 a month." I'm like, what are you kidding me? You're spending 20 grand a month now. So you got to put it in perspective. You got to run the numbers. Don't just guess. And if you have some time, you can fix things. If you wait until you're 62 when you start calculating numbers, it doesn't work. Ryan, what can clients do to sort of get a handle on this so that they're not surprised later on?
I would say the first step is to contact our office. We could run different illustrations for you and do a portfolio analysis. One of the things that we have been doing is a lot of our retirement projections, we've actually adjusted the inflation up just to be in line with what current market conditions call for. Let us know if you have any other topics you'd like us to cover. We'd be happy to include those.
And also the YouTube video channel we have has all our past ones on it. You can look at it.
Thank you so much.